Thank you for tuning in to another edition of the Vulcan Report. This end of day, end of week report is for trading on Friday, August the 19th, 2016. Taking a look here at gold and how it performed. For the most part, flat. Flat market. A lot of up and down, but going absolutely nowhere. Momentum is pointing up to end the week, but not a lot of volume, not a lot of action, just bullish. It's holding, it's like an arm wrestler, it's like a champion arm wrestler. And this champion arm wrestler has enough power to hold the other player off. The player can't really move his arm up or down, and they're just like at a standoff. Nothing can happen. But the champion is besting him just by an inch or two. You know what I mean? So that's what's happening. It's leaning, it's flat but it's green, so it's leaning to more positive momentum, and that's what you want to see when you are long in a market like gold. You don't want to see a lot of weakness in the sideways movement. You want to see more green on the screen because then that provides more energy. So when it breaks out to the upside, it really, really, really explodes. And that's what you want. So there's an old saying that you never short a dull market. And I must say, this market has been pretty dull this week. Up $10, down $10, up $10. It's just up down, and going absolutely nowhere. And we'll take that for those that are long gold. We'll take that because that signifies to us that we can expect higher prices going into next week. Now, looking at where we performed, came within a tick basically, or two. Technically, it's 60. Yeah, it came within like two ticks or what have you of getting filled on the long side. So didn't quite fill that long, and because I didn't really have a rally or crash alert on this one, we were pretty much just holding the positions, not really paying too much attention to it. As far as on the flip side, no sell short signals got triggered in the gold, so it's just flat, holding steady, and going nowhere. And we look and see what happens next week. Switching our focus now over to the equity side of things, looking at the GLD. Pretty much the same story here, but again, staying afloat, managing not to trigger any shorts, which is exactly what you want to see in a bullish trending market, especially where there's really no real sign of weakening or any technical situation going on, and that's what you want. You want to see healthy pullbacks when they come, but you don't want to see these flash crashes, if you will, for no reason. They don't need to exist. There's no reason to see that. And in a healthy market, that's what's up. So that's what you're seeing here. You're seeing that the markets are behaving and acting the way that they're supposed to. So moving forward, I think that next week sets up really nice to finally break above the 130 price handle, get us possibly in toward 135. I just don't think the market's ready for any kind of a pullback yet because when you break it down, you really haven't had a really significant run. It's just you had a nice move up, but it hasn't been anything, just crazy or anything like that. So you got room to build from here on this bullish position. Now, focusing, looking where the pulse waves had to say about this, we did have a an alert in for this week. We had I like to call it a soft crash alert. A 411 is usually a soft crash alert. A 911 is a hard crash alert. This one was a soft one, saying that it's possible that pullback was going to come, and we had a price trigger alert all set and ready to go on this one. And the market got down to 127.46, did not get low enough to trigger a short. So the long position would not have been stopped out in this one. So if you're long the GLD, which I'm still long the GLD, then you're holding the gold position at this point, and you're doing good with it. You're not really seeing any real price decay, if you will. All right, taking a look now at your nugget. Of course, this is your ultra long position here. If you're trading the nugget, you know that these can see pretty big swings of volatility, especially in quiet periods. What do I mean by that? Well, for the most part, gold really didn't do a whole lot. But when you take a look at the price action here in the nugget, because it's a leveraged instrument, you see it went from $170.88 down to $145.11. Had you been a subscriber at the end of last week to the weekly pulse waves, you would have realized a significant profit on your short for in this particular security. Uh, this one had a 911 crash alert for this week, and you can see where that crash alert played out to a T. The market, kind of surprises. I wasn't really expecting too much noise here if gold was able to maintain, which it pretty much did. But you can see here, this closed near its lows with downward pointing momentum and increasing volume. So it's acting like it wants to come down and run stops down here to the support of 124.80. All right, so it's supported right now at 124.80. Strong support is at 117.41. If the 117.41 is bested, it puts us in line to come down here to the trend line of 100. All right, and that's, or really it's 106. So, you know, it would put it at the top of the Kumo cloud on the outside, but you still don't want to usually see a makeup like that in a bullish chart in a strong uptrend. Okay, so I mean, mind you, your trend lines aren't that away from the Kumo cloud. Okay, so we take that into consideration. You could see extended, elongated period of consolidation outside of the Kumo cloud, kind of like being pulled in by gravity from it, extending out a little bit. That's possible. I mean, we'll run the system. I'll see what happens when I plug the numbers in. We'll see what we get. So just for you that subscribe to the weekly pulse waves, go ahead and just be on the lookout for that email from me, letting you know that you can now download your price triggers. Should be ready for you before Monday's open at 9:30. You should have that. I try my best to really get it out before the 6 o'clock p.m. Opening bell for Sunday night, because that's when the futures start trading. And I know some of you want to get in there and take advantage of what may be happening on the future side of things. So I try to get it in there by then. So we'll see. But at any rate, just know that it's going to be interesting for Nugget going into next week, regardless of what the underlying gold does. Just keep that in the back of your mind. Good old Rusty Dusty. What can you say about him? Ticker symbol DUST. Poor thing. It's doing nothing and wasting away slowly. A slow, quick death. Hit a low of $4.80. Finally was able to close, well off those lows at 543. A lot of people are in this one. It traded over 175 million shares. So, I don't know. I mean, it's going to need to really power up just to break the downtrend. It has to close above $7.28 next week. And really, to be honest with you, the pulse wave is probably going to be around $8. just to say that the bottom is in, it's going to have to get to $8 next week, close above $8 next week. I don't care if it's $8 and a penny, 801. It has to close above $8 next week just to put an end to this elongated downtrend, this down stretch sideways low, slow tricking. It's like a slow dripping faucet. That's what this has been. And you got some good momentum ahead of you for next week, which would suggest that the gold is going to pull back next week. But that's just a bet, because as you saw on the last chart, there's anything bearish on that chart. Now, there could be some bearish underlining current within the price action. I won't know that until I run the system. And remember what I told you, you're not going to see the algorithms in the chart. What you see in the chart is just a picture of the historical price action itself, but you're not going to get the true meaning of the price action just by looking at a chart. That's what they don't teach you in technical analysis, but I teach you that in the trading course. So where the stock charts stop, that's where I pick up. So when I run the algorithms, they will let me know if there's a crash alert, a rally alert, anything like that in the works that we need to be mindful of going ahead for next week. All right, taking a look now at the gold miners. What we have here, what do we have here? Well, we finally on the GDX started to pull back just a little bit more today. We got down to 29.66 this week after hitting a high of 31.30. All right, so it's not too significant. Market is still extremely supported at 27.86 and again at 28.56. So that's a nice support range for next week. Hopefully the market can, if it's going to pull back, you don't want to see that bested. You don't want to get below 27.86. You want to see it settle somewhere between 28.56 and 27.86. That's what you want to see for next week. You don't want to see a close anywhere outside of that range. Okay, it can close within that range and be just fine, but you don't want to see 27.86 taken out. If that's taken out, then it could spike below the trend line support here of 26.93. That's this pink, purple, magenta looking line here. All right, if this is taken out, this support's taken out, then this is definitely going to get you here, and that would cause a liquidation of longs at that point. It would force you to take profit here. Okay. All right. Thus, that would cut into, for those of you who are just playing the conservative side of things, it would take your profits depending on where you got in here, but your last opportunity was here, so it would you would walk away with a couple bucks, but not nowhere near what you wanted. You walk away with about $2, but you could have walked away with a lot more had you gotten earlier when you were supposed to, back when the market was up in here, when it was telling you that it was ready to turn. So this is the late entry for the second leg up. This is your initial leg. This is your second leg, and if this is bested, then it's going to set the stage for a third leg. But you don't know when that's going to come. Can it come here? Will it come over here but be up here, or come down here and be over here, or is it going to be somewhere down in here? You don't know. So you got to take what you can and give nothing back. All right, that's where that expression comes from. All right, looking at your junior miners here on your gold. This one, again, the juniors are just looking absolutely fantastic right now. This one's well supported at 44.40 and 45.86. So long as we don't take out 44.40, we're good. And that's what you want to see. You want to see a settlement somewhere in there next week if we're going to end on the bottom side. But I just don't see any signs of that. I think this is going to break 55 coming up next week, and that's what I'm excited to see. I know momentum is pointing down a little bit, but you can't always go by this because it's flat momentum. It's in a range. This momentum here has not hit a new low, so you're not really diverging from price all that much. Um, there's nothing here. It's just flat. It's nothing. So this one's still strong going into next week. All right, looking at silver now. Now, with silver, if you remember me saying, I said we did have a warning for silver for this week. And if you go over to the blog, I did post the technicals for the silver for this week, and you can see that there. It's plain as day. Um, $19.48 was what we were looking for on that. And to see how much it gave us from that, well, we did hit a low of $18.97 there. So it did give you roughly 50 cents in the trade there that you would have been looking to protect and defend. The market did finally settle at 19.27, so it did settle, about 21 cents below the initial entry price. So it's not giving you, you know, dollars, but it's giving you cents. So you would have been able to at least walk away with a small profit there in that. Being that that is as it is, it leads me to believe, and then how we closed, how the market closed. I don't know if there's really too much sign of deeper continuation. Yeah, it could get down to the trend line of 1845 support, and then you have another support underneath of that at 1782. But I don't know if that's going to really come into fruition, only because we hit oversold today, and the makeup of the chart suggests that this may not we may not have a continuation next week. If anything, it could be an inside week setting up for the next breakout above 20. See, that's where charting is limited, because just by if you just go by your eyes, it looks like you have an overarching sloping price and coming down and resting somewhere in here. But that's not necessarily the case. You won't know that without switching over and looking at the algos. How are the algos set up? You don't see that on the chart. That's not going to show you anything on the chart. That's what I'm explaining, the power of the pulse waves. You have to go with what the pulse waves are saying. Price will the price action will tell you, looking at the market depth and the put call ratios and all of this other jazz. It's going to show you the real heartbeat and pulse of this market, hence the pulse waves. The chart itself is good. The indicators on the chart, they're great. That's great. It's a nice tool. But you want to know, before you put your money and hit trade, what are the odds of you on the right side of the market? Period. That's what you want. All right, looking at the cash side of things now, on the equity side, on the SLV, telling a little bit different story, because you actually went out on the lows. All right, SLV kind of went out like a sucker. You know what I'm saying? Went out like a punk. He wasn't able to recuperate. Now, I have to say this. I got to keep it real with you. I don't like this chart right now because it's going out on the lows of the day. And as you've heard me say before, equities are far better priced, in my opinion, than the futures and the Forex markets. And there are many factors for that. One of those being is because you generally have a lot better spreads. And because this is a very liquid market, you just don't have those other shenanigans that come into play with the forex and the commodity future side of things, where you can have on the you can have thinner markets. Put it that way. Won't go into all those details now. Subscribe to the trading room, and you'll see me do those and show you intraday when things are happening live in the markets, and you can see for yourself. But suffice to say, just trust me when I say that the equities are better priced. So that being as it may, this does not look good, boding well for next week for the SLV. You can have a divergence between the SLV and the silver futures for a brief period, where this gets weaker and comes down and tests this 1724. Excuse me, and that is a possibility. Of course, I don't want to see that because I'm holding the SLV. I'm long the SLV. Okay, full disclosure. So we'll see what happens. But I'm not shaken out of the trade unless the stop loss is hit. If the stop loss is hit, I'm not married to any security or direction of a security. I will quickly liquidate and get myself short if need be, because that's how you play the game. You don't marry to anything. You can quickly divorce from your position at any time for any reason, even if you don't like it, it don't feel right. You just liquidate and look to, um, you know, restructure yourself and reposition yourself back into the market. That's how you trade. That's how you do it. That's how you that's how you do it like a OG. All right. So on this one, 1867 um, would have gotten you out of the SLV long if you were using the hard stop rule, where you strictly stay with the pulse waves on these. But there's a little secret with trading equities, and those of you who are members of the Black Ops room have heard me say it. Um, you don't have to play hard and fast stop rules with equities unless you're super leveraged and on margin and all this other jazz. So let that marinate for a minute. All right, looking at your miners, SIL, same thing, but a little bit better because it finished right here above the blue trend line. So this one is sitting pretty. Like I said, the miners are doing way better here. And the junior miner fared a little slightly better than even the big boy, and it finished above the blue line as well. So the miners look real good going into next week. So remember, bulls make money, bears make money, but pigs get slaughtered. So take what you can, give nothing back. Have a blessed weekend. Thank you for tuning in to another edition of the Vulcan Report. This end of day, end of week report is for trading on Friday, August the 19th, 2016. Taking a look here at gold and how it performed. For the most part, flat. Flat market. A lot of up and down, but going absolutely nowhere. Momentum is pointing up to end the week, but not a lot of volume, not a lot of action, just bullish. It's holding, it's like an arm, and we'll take that for those that are long gold. We'll take that because that signifies to us that we can expect higher prices going into next week. Now, looking at where we performed, came within a tick basically, or two. Technically, yeah, it came within like two ticks or what have you of getting filled on the long side. So didn't quite fill that long, and because I didn't really have a rally or crash alert on this far long in a market like gold, you don't want to see a lot of weakness in the sideways movement. You want to see more green on the screen because then that provides more energy. So when it breaks out to the upside, it really, really, really explodes. And that's what you want. So there's an old saying that you never short a dull market. And I must say, this market has been pretty dull this week. Up $10, down $10, up $10. It's just up down, and going absolutely no one. We were pretty much just holding the positions, not really paying too much attention to it. As far as on the flip side, no sell short signals got triggered in the gold, so it's just flat, holding steady, and going nowhere. And we look and see what happens next week. Switching our focus now over to the equity side of things, looking at the GLD. Pretty much the same story here, but again, staying afloat, managing not to trigger any shorts, which is arm wrestler. It's like a champion arm wrestler. And this champion arm wrestler has enough power to hold the other player off. The player can't really move his arm up or down, and they're just like at a standoff. Nothing can happen. But the champion is besting him just by an inch or two. You know what I mean? So that's what's happening. It's leaning, it's flat, but it's green, so it's leaning to more positive momentum, and that's what you want to see when you are